Hello, everybody. This is Mauricio Carrillo, and we are here with Valeria Bednarik from FXstreet.com. Welcome to our US GDP live coverage. Hi, Valeria. How are you?
Hi, Mauricio. Hi, everyone. Welcome to this live coverage. It's a pleasure again to be here with you all. Unfortunately, Dale was sick today, so he can't join us. But I do believe that Mauricio invited Ed Matz to join us in a few minutes, so he can help us a bit with the preview of the US GDP final revision. Right, Mauricio?
Yes, Eddie Matt will be with us in 15 minutes. He will provide us with his approach on the GDP and what's going on in the economic, what's going on with the Fed and the recent Yellen speech. So what we expect for today, Valeria?
Well, the US GDP is calculated quarterly, and we have three releases in 3 consecutive months of the same reading, the second quarter in this case, figure, right? And we have a previous, an actual, and a final revision. So actually, we are going to see today the final revision of the second quarter GDP, and it's expected to remain unchanged as it's on the previous review at 3.7%. So actually, it's the one that has a less interesting impact in the market because it's the second review, right? The one with the first release, the one with the first reading is the one that actually has a stronger impact in the market. Nevertheless, considering that 3.7 seems a bit high, mostly because of tepid data continuing to coming on in the US lately. If we have a downward revision of that number or an upward revision of that number, we can see some market movements anyway. If it comes in line 3.7 as expected, it has a little chances to affect the market today. Anyway, I do believe that the most important thing is that yesterday, right after Wall Street closing bell, Miss Janet Yellen, the Fed, I was about to say ECB, the Fed chairwoman, made a speech in the Massachusetts University, right, I believe. And
Yes.
in the middle of that speech, she said that there's a good chance that the Fed will raise rates before the year end, and afterwards it will continue with small rates until normalization, one of the favorite words of the Fed. And
She,
all the
she, she already said that she personally thinks that it will be a hike this year.
Yeah, she personally believes that there will be a hike this year, and many other FOMC members, according to her words. Anyway, that we have seen some wild movements in the market these days because it was not about dollar strength or dollar weakness. We saw, for example, yesterday, like the euro rising, the Japanese yen also rising, and the Aussie or the CAD both plummeting, right? It was mostly because market it has been driven by sentiment, by this wild slump in stocks we had because of uncertainty over what the Fed may do and the continued soft data in China, arising fears of a global slowdown. So market sentiment was leading the market. Euro was being seen. It's actually today been seen as a funding currency, right? And it's getting some support from the market. Anyway, overall, it has been pretty wild, but seems that Chilean has bring some stability, at least clear up the future, right? Saying that they will do a rate hike either in October or December when we have the two last meeting of the year, right? Anyway, I don't know. I do expect that the report today, my personal view, okay, it's not what market is expecting, will come a bit below what we are expecting, a bit below the 3.7. And given that Chilean has been saying that a rate hike is anyway data dependent, that could be a bit of a problem for the greenback. Maybe in that case, I could be looking for euro dollar recovery up to 112. But the upside seems pretty limited in the pair as long as we remain above those highs in the 1460 region that the pair replicated after the last Fed meeting. If you take a look at bigger time frames, let me show you. You will see that the price has stalled several times around the 1460 price zone, right? Many times. That level has contained the upside ever since February, right? And it's exactly where sellers came back after the Fed decided to leave rates on hold. For the most, the pair is trading range bound, and there's little we can do about it. On the other hand, the other extreme is the 111, 110.80 region, the level that has contained the downside for most of this month. So I don't know. It would take today a really strong upward review to see the pair breaking below this level and extending its advance. The dollar, of course, towards the 1050 level, right? Which is also a very strong static support level. Also, sorry about that. I was thinking that we have payrolls next week. It's payroll time again. I can't believe it, but it is. So the market may well maintain the range until then, right? Trading in between 111 and 113 with little directional strength in a way, right? But anyway, you can grab some pips in the middle of that range. I don't know, Mauricio, you were going to say something?
Just checking if we have some questions, but for the
Okay,
moment, I'm
let
not
me
sure.
let me check.
No, we don't have questions right
No,
now.
we don't.
What do you expect for the euro dollar?
Well, that's what I would say. That if the number comes below expectations, we may see the pair recovering up to 112, and above the level up to 12, 14, 15. That's the level I will 15, 50, no 15, 50, 12, 40, 12, 50. That's the probable bullish target in the case of a really negative GDP number, right?
Right.
Yet, on the other hand, the the base of the range of this last month, this whole September, has been the 110.80, 111 price zone, right? So in between those 20 pips, the pair has found buying interest many times, right? If you take a look at the chart in there, I will make it a bit larger. Okay, there we are, right? This is the level I'm watching. So actually, we need a really strong number, really strong figure to see the pair breaking below it today. Anyway, I still do believe that we may remain in between those levels and the 113 level until next Friday if the number comes in line with expectations.
There is a quiet session today, right? It's
Let
not
me.
too volume, not too high volume, not too many people trading, I guess.
Yeah, I do believe that ahead of the news, market is being extremely cautious. Uh, I don't know, things had been pretty wild yesterday and the days before. In fact, ever since the Fed meeting, because it has left us all with, okay, and what now? What should I do now? Are you going to rise or not going to rise? What's
Yeah.
going on in here? So those levels of uncertainty has pushed many investors outside the boards, and it has been pretty intense yesterday also. So I guess that today many are saying, okay, let's Friday, let's take a break. At least until we have the GDP reading, right? May or may not wake up the markets. The other one trading in a quite clear range has been the dollar Japanese yen. I have this Fibonacci retracement from the last strong weekly slump, right? We had mid late August, right? And ever since that Black Monday, the pair has been pretty much containing between this 38.2% and this 61.8, one at 1930, the other way around 21.35, right? And the fact is that if you have been playing that range, it has been high profitable, but the fact is that the pair is going nowhere. I don't know. The pair tends to react strongly to the US news, right? So we know that. We know that it will probably reactive, but the number has to be different of what the market is expecting, because whatever the market is expecting, not in this one, but any other report, it's already priced in, okay? So unless we have a strong deviation of expectations, the pair will probably maintain in range until again next Friday when we have US GDP, US non-farm payrolls, right? Also, what I have noticed in the dollar Japanese yen is that the buyers are pretty strong on dips, guys. I do believe that buyers are pretty strong on dips, because if you take a look with the times that the price has approached to the base of my range, right? The following candles are the ones with the most volume, the ones longer, the ones that showing strong upward bounce. And that is telling me that buying the dips is the name of the game in here. So beware of that. Beware of looking for a break below the level. The fact for me is that the level to break is the lows from late August around 1850, 1860 in there, right? It will actually, we need to blow stops below this area to see a bearish potential increasing in the dollar Japanese yen. In the meantime, it is a range game, and approaches to this 1880 area are are probable buying opportunities, and really big ones, because the market is eager to buy around those levels. Let me check if we have any questions. You see my, okay, we don't. Great. Hi, everyone. The one saying hi. As I said before, Dale is really sick today, so unfortunately he can't join us. But in a few minutes, or I don't know, in a couple of minutes, Ed Mats will be joining us, and he will share with us his view on what we could expect for the next 13, 14 minutes, right? Uh, the one that is a bit surprising for me, it's pound, right? Because although I was bearish in the prayer and I was expecting a full retracement to this low 151.61, in fact, we had to just break to a new September low even before the US data release. Uh, the fact is that I'm not sure of where this weakness of pound is coming. I'm not, I don't have it clear. You know what I mean? I'm bearish, and the market is telling me the pair is bearish, and I have a lot of bearish signals, but I don't know if there is a certain reason beyond this slump, right? Anyway, the fact that the pair has corrected up to the 61.8% retracement, failed to break above it, and retreated sharply from the level, and it's about to break this low. It's actually a very bearish signal in the mid long term, and I'm seeing now a probable bearish target in the 49.80 region should we end the day below this low, right? Sorry. Uh, Sheikh says, I like emphasis on practice, trading ideas, practical. Yeah. Well, here we are. That's me. I'm not Dale. I do believe that we make a good team, though. We bring a balance to each other many times over our with our different views. But what it's really interesting, as Dale usually remarks, is the fact that with different ways of seeing the market, with different systems or methods, we usually tend to agree in the levels to watch the breakout levels, the ones that will probably attract buyers, the one that will probably attract sellers, or the ones that, if taken, will signal a clearer trend, right? So I believe that that's the most important thing about being together. About the Aussie, the fact is that the pair is still on risk of a bearish breakout despite this today intraday recovery, right? Because also taking a look at bigger time frames and the strong weekly latest decline, if you take a look, the period had done pretty much the same as the pound we were saying just now, uh, reaching the 61.8% retracement, failing to hold gains above it, and retracing strongly back below the 23.6 and approaching to the multi-year low around 69, yeah, 06 post early this month, right? So although right now I'm not seeing much of a bearish potential in the short term, the fact is that I don't see how the pair can regain much ground beyond the upward corrective movement or relief we are seeing today. If we break above this FIBO around 70.30, then the pair can go up to 70.70 and even up to 71.10, right? But I would expect that level to hold, and I'm still bearish in the longer term. So if somehow the dollar regains its strength and we have a short-term break below the 69.90 level today, we can see the retest of yesterday's low around 40 and even a continuation down to this level. Beware, however, the market, as I said earlier, is not only trading on dollar strength, dollar weakness on the news, but mostly on sentiment, and what's going on in here with stocks and commodity has a lot of saying in what's going on in here, the Forex world, right?
Yeah, well, actually, in stocks, they are reacting to the upside. The European shares are rocketing, and US stock futures are going up too.
Yeah, also, but I was talking about this yesterday with Dale. Take a look. I have the DAX not because I traded, but as an example of what's going on, as a guide of what's going on in Europe, right? Because it's the German index, and it's telling me a lot. And if you take a look, right, we are still in between Black Monday levels, which is this huge candle. We have approached the lows yesterday, and the fact is that after topping around 1214 in April this year, the DAX has been on a tear, right? A very sharp decline. And if we take a look at bigger time frames, it's below the moves 100 and 200 moving average in the 1 hour chart, in the daily chart, in the weekly chart. So generally speaking, the risk in European indexes remains towards the downside. I know they are correcting higher today and may continue, but the long-term trend is far from turning higher. And when it comes to the Dow, it's pretty much range-bound. Take a look at these forward charts. Ever since the month started, we have not been able to set a trend. I usually take a look at the momentum indicator, moving back and forth with this midline. The 100 simple moving average is pretty much flat. So
Okay.
I see this as being a bullish signal or a bullish breakout continuation. We are far from that.
Nice.
Sorry.
Okay.
I
No, the
talk too much.
point.
I talk
Okay.
too much.
No, Val, we have here Ed Matt. Hi, Eddie. How are you?
I'm good, Mauricio. How are you?
Well, we are fine. We are trying to. Well, let me introduce Valeria Bednarik. It's our chief strategist.
Valeria, how are you?
Hi,
in
Ed.
United
Nice to
States.
meet you. Very fine. Very good. Sorry. Thanks.
It's an interesting market. I
Ed,
noticed you saying about the range, the trend in some of these things, some of the markets, like equities, is actually sideways. I mean, for all the massive debate we've seen since before and after FOMC last night, the market's actually going sideways. We're all kind of seeking trends. Some markets are kind of almost as a sideline, like dollar Canada's making new highs. Certain other markets are pushing the extremes, new territory. DAX in US dollars made new lows this week, and yet, you know, for example, DAX didn't. And we kind of look saying, is this market really moving? And it's moving violently for sure. And the interesting thing about one or two of the obvious, there's a lot of obvious consensus points out there. You know, stock market's going to find a bottom in October. The dollar is in an uptrend, therefore it's a question of selling rallies. All these things seems to be a broad consensus. The part of the problem is, although it's going sideways, some of the moves are so quick that people lose sight of those obvious facts. And that's, for me, is the interesting thing, or the hard thing, is because a lot of this market's being moved by sentiment, and sentiment is not being consistent. Obviously, historically, Volkswagen gets nailed, it's down 30%. China catches a cold, Janet Yellen says it's got flu, and the market suddenly flips, and then sentiment is quite clearly one way, give it a little bit, and then 24 hours, and then sentiment's overdone, the market comes back, and that's what we're seeing. But you've got to step back. Something like today with GDP is really interesting and totally uninteresting because it fits into that scenario. And you have to ask yourself what we've seen in the last 24 hours and last week.
That's right.
What is really happening, and what is happening?
Yeah, what is happening?
The dollar's getting stronger. The stock markets are going lower. But you get a sense that a lot of these moves are kind of spent to some degree, and now we are pushing sentiment. And the point I made about sentiment is the market's moving a little bit too quick to see some of the extremes. So we're not getting extremes. It may feel like we're getting extremes, and moments like
because the market doesn't know where to go. Sometimes Yellen said, okay, we're going to hike, but not yet, and then they doesn't decide when to go.
Well, if you step back, what is really happening? Well, it's quite clear the US is growing. We'll see that today. Whatever number comes out, let's say it's a freakish number and it's down at 3 or whatever compared to 3.2. It was, I think, last time, and 3.7, isn't it, expected today in US GDP. But the bottom line is, compared to the first quarter, is a good number. Quite clearly, the US is coming out of recession. It's in growth, and therefore carries a risk of inflation. And that has consequences for interest rates, and therefore one presumes has consequences not just for the stock market in terms of interest rates, but also corporate earnings. And people have been saying, the stock market's overvalued compared to corporate earnings, but those corporate earnings are expected to grow. So it has, so we're expecting to see more of the same. And yet, this is the interesting thing for me. Go back a year, the market was trapped. It was going nowhere. This is stock market, and therefore, consequently, you could argue the dollar, but that wasn't the case. But the stock markets was trapped sideways because, on the one hand, you had US growth and corporate earnings higher. On the other hand, you had taper, and therefore the support of the stock market off, and therefore stock market lower, and that's why it was going sideways. And what we've seen in the last not even 3 months, isn't it? It feels like 3 months, but it's probably a month, is China. And so you've got China whacked, you've got the exogenous shock hit, depresses the stock market. Well, we know it's because of higher earnings, higher growth, higher interest rates. That's why the stock market's low. It's not really, I don't think. It's low because of China. And as a consequence, now we have same old story. We have economic growth. We're going to see it today again in GDP. We're going to see everything as a consequence. And yet the market is trapped. It is trapped between higher growth, higher interest rates, and then risk of China. So Janet Yellen, I admire the lady, but that was really crass what she did last time on FOMC, coming out saying one reason they couldn't possibly raise rates was because of the political risk associated with China. Well, if you want to force the market lower and force China lower, then go ahead and say something like that. And what she perhaps, the bold thing to have done, what she did last night, was actually to say, well, we want to raise interest rates because the economy is strong. That's what she could have said, but she didn't. Anyway, that's beside the point. She's an expert at what she does, not necessarily the politics. I guess that comes with time. But anyway, so that's what she did last night. I think she tried to put the record straight last night, and as a consequence, the market got the same thing. She came out and said China's bad, can't raise rates, or imply can't raise rates for a while, and then last night said we want to raise rates, implying that China's not so bad. One presumes, the logic would be. The net result is the market's much higher. And going into today, GDP is going to be all about, because it's going to come out as expected, even if the number's completely loopy, it's going to be about positions that are sitting there already. I imagine there's, say, in the stock market, there's quite a few people short who are going to scramble, who are going to be looking for the excuse, hoping maybe that the GDP will come out with, well, this is the problem. GDP good, you'd think, well, that would be a higher stock market, but GDP good means rates can go higher, particularly given what she said last night, then the stock market will come off.
But the last time the Fed didn't hike rates, the stocks went down. So perhaps the stocks want a hike rate right now.
Yeah, I mean that's to me it's a sign of strength, and that's the whole point about China and what she said and didn't say is raising rates is a sign of strength, and actually would be the first reaction. You know, raising rates, the first, let's say 1% S&P down, 5% up. That's the reaction. But none of this matters today, Mauricio. None of it matters. What matters today is the market got stuffed yesterday. And therefore, people would be saying, you know, there'd be the born again buyers buying dips. You know, the market, maybe that's the bottom, and now where China seems settled, and now it's an uptrend, we'll buy into it. And you're going to find people who are short at bad levels from yesterday will buy the dip, and therefore.
So today will be closing positions or rebalancing or the last day of the week. Yeah, you know.
Exactly. Well, also, let's try and put in terms of the dollar. You've got something really interesting. Cable. I mean, look at cable. Cable's on 150, 175 support. I mean, that's what do you do going into GDP on that? Well, you know what? Well, it's actually, you know what cable's going to do. It's going to wipe out the stops, and then it'll come back. And at the end of the day, it probably won't be anything changed. I mean, that's kind of where I'm coming from today. I don't expect at the end of the day anything to be changed. That may have to carry on to Monday, but some things we're going to get adjustments in between. For example, with the euro dollar, people are now thinking, you know, the dollar could be stronger given what Janet said last night about higher rates, looking for GDP to reaffirm that so they can buy the dollar. That is the consensus, but some people already, you know, they're in at bad levels because the euro dollar's moved quite a lot. So I would actually expect the euro dollar to squeeze on the upside as a consequence before it's strengthened. The same with cable. Take out those stops, then squeeze. Dollar yen looking a bit toppish here. You know, some of these markets are actually providing good opportunities. Aussie, I'm a buyer. Aussie below 70 the figure, I'm a buyer. And so today, thank you very much. You know, it's there's a disconnect, a disjointedness out there reflected by some of the crosses that gives us opportunities on this adjustment. But today, GDP is all about an adjustment, I think.
Okay, I see. Okay, so we are just about to have the release. Just remember, guys, that we have a 30-second delay, so we will cover in the react of the reaction. Let's say what's going on here.
3.9, much better than
much better than expected.
Yeah.
So let's see what's going on in the market. What do you think?
Yeah. Well, as I said before, I was not really expecting an upward revision, but I do believe that this won't be bad news for the greenback. On the contrary, it's a very nice news because it means the rate hike is being confirmed. Remember that Chilean has said although she said that we will have a rate hike in between October and December, we are still data dependent, and I believe that stocks will rise anyway despite ongoing dollar strength, because as Ed was saying recently, and we have discussed many times with Dales, stocks need good news in the U.S. to rise. It's not just about interest rates in stocks no more. If the U.S. economy is getting healthier, then stocks will rise. If the U.S. economy tumbles, then stock will do the same, right? So actually, right now, I would expect the dollar to rise and stocks to maintain their positive tone over the American afternoon.
Okay, and Ed, just what do you expect now from the current levels? For example, what do you expect from the sterling?
It's a good number. They're going to try and push the dollar higher. They're going to push the stocks higher. One thing I don't think much is going to happen. I could be wrong. Much is really going to happen for the next 30 minutes, hour. I think the market will die a death probably until, say, for example, the New York stock market opens properly. And then we can get some same story. Yeah, the people that are bad short in stocks will buy it up. And then the dollar might be able to strengthen later, but I'm hoping partly that the euro is going to hold up here and rally because nothing's doing. People just say it's another Friday. GDP was a good number, but in actual fact, it's a disappointment. That's what I'm hoping. That's what I'm kind of looking at. And I'm also looking at, for example, cable not to be sustained here, not yet. So I'm kind of trying to be a bit of a damp squid on the day. Squib even, not even squid. So that's really where I'm coming from. Interesting.
Yeah. Well, the pound is right now in a interest level.
Yeah, you see, there's going to be a lot of stops have just gone or have been going through, before, in fact, GDP, and now afterwards. And now that GDP is out of the way, they're going to, presumably, if you were risk averse going to the number, you'd be hitting bids now, and I think that's personally a mistake. But I've been short cable for, again, it feels like months, but actually it's only a few days. But I've squared most of my position below 52, the figure, missed 30 points, so what. And now I want it to, talking my book, I want it to squeeze back up, but remains to be seen. Typically, Friday's a really bad day for cable. Yeah, I mean, we've already seen that. But typically it's a bad day, and typically it's an unsustained day. So, that would fit in well with that scenario.
Why is a bad day for pound?
Sorry,
Okay.
why is Friday a bad day?
Yep.
Because it is. Why?
Well, I don't know. Perhaps.
Well, I'll show you the charts. I'll show you the numbers. The seasonality charts: Monday, Tuesday, Wednesday, Thursday, Friday. You want to buy cable, buy it on Thursday. You want to sell it on Friday.
Yeah. I see.
I can't explain to you why. Oh, I don't know. I can't not even bother. It just is. Just take it from me. Friday's a bad day for cable. You generally also, I mean, there is questions of market turns throughout the week. The Friday to Monday axis. If you want to look for a reversal, seek it on a Friday to Monday, not Wednesday. Generally is the case. There's just some market laws. Like turnaround Tuesday. Turnaround Tuesday is actually statistically wrong, but who cares? It tends to be turnaround Tuesday. If you put it in that context, Monday, Friday's the turn. Then you get the move, the sharp move on the Monday. Then it stops, and then you get correction Tuesday, which some people label turnaround Tuesday, but it's not. Still, Canada. So it's just, I don't know. I just feel. For me, this is good. This is going to be a disappointment. The market's not really shifting a lot. Basically, I want to see this squeeze in the next hour, the wrong way, the way counterintuitively, and then I want to see it. Carry on what it should have done on the numbers. At the end of the day, they'll say US GDP came out better than expected, 3.9, shows an improvement in the economy. Stocks ended up higher, dollar ended up higher, but as we sit here now and in the next hour, maybe we'll disbelieve that. So that's kind of where I'm coming from. Does that make sense?
Okay.
Otherwise, if you were looking to sell cable, if you're looking to sell euro dollar, I wouldn't do it now. I'd look for the squeeze. Look for the squeeze. I expect the first move on the stock market is gonna the first move will be higher. Just like 10, 20 points, they'll try and buy it, fail, and say that's a waste of time, and they'll start selling it, trying to sell it, and then the people shorts will come and just support it. Say, look, I'm stuffed, I'm buying it back, and then we can close much stronger. So that kind of, for me, what I've seen in GDP is just confirmed everything I was thinking. So what a surprise. No change. Does that?
Okay. Okay. Valeria, do you have any question for Ed?
No, I was taking a look at the calendar, and I've noticed after the release that we have also a positive revision of personal consumption expenditures in the second quarter, up to 1.9, which is good, maybe not excellent, but good. It's a signal that inflation in the U.S. is also rising. So I was thinking about that. What's your take on inflation? Since that it's the only thing in between a Fed and a rate hike, right? At this point, for me, at least.
Yeah, I think it's probably more of the same. The U.S. economy will grow. The growth will be faster than inflation in this period, and yeah. So I think inflation will continue to disappoint expectations, but growth will match expectations, and we'll see the occasional banana skin thrown in. It was China, it was Volkswagen, and whatever it's going to be next week, and probably oil was going to raise its ugly head again. We're going to get those things throwing up, and in a way, those exogenous shocks will probably dampen inflation. So I think there's a real risk that combined with the combination of these political risks slowing the Fed, what it should be doing, raising rates, slowing them, and exogenous shocks like that, slowing the Fed, whereas growth is continuing, the Fed's going to end up behind the curve. And as a result, we're going to see rates, it seems an eternity off now, people won't be able to see this, but we'll see rates actually rise far more rapidly, probably 12 months from now, than people would have expected, than the Fed would have expected. And personally, as people will know, I actually don't think we've seen the top in the stock market, and we'll see the blowout and the bubble on that. I think the Fed's going to create this. We're creating the recipe for a crash next year, because the Fed's going to be behind the curve, and then everything will get out of hand, and then it'll come back in people's faces. And we're witnessing that, when we can't see that now, I don't think, but that's my belief. And as a result, we'll see the markets react accordingly. So,
Okay.
yeah, sorry, I'm like you, Valeria. I like to talk. So if you ask me a question,
and it's great. Really, it's great because, I'm usually with Dale in here, so it's easier. It's hard to be on your own in this kind of events, but having someone that likes to talk also, it's a pleasure for me.
You let someone else bullshit or waffle on. I should say that word. Yeah, no, it's. Well, the good thing about what you do, and the good thing about what I do, I find people ask me actually, why, you're a trader. That's exactly what I am. Why do I do what I do then? Why do I produce a service? And fractals and stuff, put it out there, because it's a discipline. Yeah. If I sat there and did nothing but trade, there's a real risk, because I tend to be quite passionate that I might overtrade. I won't analyze markets in the same rigorous, scheduled way that I do. And as a result, when you come to speak and you go on webinars, and I'm sure this applies to you as well, you actually have to articulate your thoughts aloud. And when you articulate your thoughts aloud, you actually realize some things, actually reinforce what you think. And then that's really true. And in fact, that may be conveyed to people listening. And you may actually notice also yourself there's some mistakes, or some things don't add up, which you hadn't thought of before because you didn't try articulating it out. It's one of the old adages. If you want to make sure you've learned something, actually try and teach someone else the same thing, and then you realise you've learned it. And the same thing by me, telling you what I was expecting into the numbers. What I was actually doing. However much I like, say, Dow and coming on with you guys and talking FX Street, what I'm actually doing is reaffirming my own strategy for the day and then the next week. And I just did that and reaffirmed my own strategy going into these numbers, that I was looking for a squeeze, which we're starting to see signs of. And that's going to give us an opportunity probably in about 45 minutes on the New York Stock Exchange Open. That's not just stocks, that's also currencies. See the dollar higher, see the euro higher, and cable higher. So that's, for me, it's an extremely long way of saying thank you for giving me the opportunity just to reaffirm my strategy. So have a great Friday. It probably is going to do sweet FA for the rest of the day, but it gives us an opportunity into next week.
Okay, thank you, Ed. I like the shirt that you have behind you from Thierry Henry. It's a nice shirt.
Yeah, it is his shirt, by the way. It is signed.
Oh, nice. Nice, yeah. Cool. Okay.
It's Champions League. No, he's a legend. He's a living legend. Yeah.
Yeah, I know it. And we got it in the Football Club Barcelona too. So we enjoy it. In Barcelona, Thierry Henry, we enjoy it in Barcelona.
Oh, you play football there, do you?
He played football there.
I'm just trying to be stupid.
Mauricio does not play for Barcelona, be sure.
No, great team.
It won't be here.
European football is really interesting.
Okay, thank you very much for coming today, and have a good Friday. Have a good weekend. Bye-bye.
Yeah, cheers and good luck, everyone. Yeah.
Thank you. Thank you. Bye bye. Nice to meet you.
Okay, Val. So, what's your approach for current situation in the market?
Okay. Well, the fact is that we have a very limited reaction to the news, and dollar is pulling back a bit after the positive number. But anyway, I do believe that bottom line is that a positive review, the final review of GDP is dollar supportive, sorry, in the long term. So regardless of this counter trade right now going on with 40 or 50 pips against the greenback, the market will go back to the dollar and hopes the Fed will raise rates in October or December. Honestly, as Ed says, and as I said many times, in this last year, the U.S. economy is actually growing. The U.S. central bank is actually in the tightening patch, and the rest of the world is behind that. And in fact, many countries are in the other extreme of of the rainbow, right? We have Europe starting quantitative easing and talking about expanding it. Japan discussing if they whatever can do more than what they're actually doing right now. Australia, New Zealand cut rates and still are in the way of another rate cut if needed. So actually there's little in the long term that supports a bearish run for the greenback in the mid long term, right? Because this the healthier economy right now. We like it or we don't. Short term and for what's the rest of the day, I do believe that we are going to some consolidation, some pullbacks until Wall Street opening, right? And then we will have the clue coming again for stocks. As I said at the beginning of this live coverage, market is mostly being led by sentiment rather than anything else.
Yeah, it say before that it was going to be just a rebalancing day, because the market was stuffed yesterday from Yellen speech. So it will be like a rebalancing and closing position, right?
Let's see what happened because, as I said at the beginning, Yellen speak right after Wall Street closing bell, right? So it happened during the Asian session. So let's see what American traders think about that, right? After the opening bell. But yeah, could be indeed.
So let's see. What do you think about the GBP US dollar? There is a kind of interesting level right now. It's testing the.
I don't know. We have bounced
51.
20 pips from the 5160 support. Actually, not saying much of an upwards trend. We have that 52 level ahead. So unless we retake that level, I do believe that risk remains towards the downside. If we approaches to that level, it should be seen as selling opportunities. And on the other hand, if we break back below 60, I do believe that the pair can go down to 51 before the day is over.
But are you watching my chart, right? There is.
Not actually. I'm watching mine.
Okay, if you see in your daily chart, in the cable, you will see like a bounce there, but the cable is testing a pretty nice level that has tested like a 2-3 times before.
Yeah, in fact, the level is 5160. Okay, because it's this previous September 4 low, the month low before today. I mean, if you take a look at bigger time frames, you will see that we have several lows in between 151.60 and 151.70. So, as I said, we are still on the risk of further declines as long as below 52.
Yeah, and there is no another considerable level below that until 150, right?
Yeah.
51 and then 150. Yeah.
Yeah. 49.80. I don't know. We can get that down there, but anyway, it's the same.
Okay, and what do you think about the Aussie, the Australian dollar?
Well, pretty much what we were discussing before the release of the news. The pair has recovered some on market sentiment relief after Jalan's words yesterday, but for most, I do believe that we are still bearish and there's little chances of an upward recovery as long as we remain below this Fibonacci level around 70-30, 70-40, right there. So actually, and we are right now pressuring the 70 figure. So my take is that we can go back towards the lows in between 69.40 and 69, the one that we posted earlier September. I do believe that it's a dollar a day. The one that it's not may not be able to do further advances today is the dollar Japanese yen. The 21.35 level has been really tough ever since this month started. In fact, if you take a look, we have been below it. Yeah, we have a small spike in here late August, but we have been below it ever since breaking below it, right?
I see.
So this is for me a really tough level. It's the top of the range. As I said, we may reach this level, but the fact is that we have been playing this 2 Fibonacci levels range in between 1935 and 2135. So I'm not seeing much of an upward potential in here for the rest of the day.
Okay, so you don't see any spike or
Yeah.
any future.
Yeah, if we have a spike, it can be short-lived, you know. Of course, if all of a sudden US stocks open and jump 200, 300 points higher, right, then that will be a bit more supportive of an upward continuation in dollar Japanese yen. But if stocks are like now going not much nowhere, then I don't see much of an upward potential in dollar Japanese yen right now.
Yeah, what about the gold?
Gold has gave up around $10 today and even more from yesterday's high at 56, right? We have a really tough support around the daily low. We have set today around 40, 50 or so. We have former highs in there. Yeah. But for the most, I believe that if the market continues to feel relief, it will finally break below it and continue towards the downside. I don't see much of an upward potential in here. Yesterday's rally was purely on risk aversion, right? The stock slumping was the reason behind this jump higher in gold. So if stocks today start to recover ground, this will probably break lower on today and end the day around 32, 36. But for the most, I would like to see it breaking below this 40, 50, in fact, level around there.
And for you, Valeria, where is the strongest currencies right now and the weakest?
Oh, what question? I'm not pretty sure if we can define that today clearly because of the wild movements we have been seeing lately. I can say that Aussie, Canadian dollar, New Zealand dollar are among the weakest today, right? Pound is also weak, although I'm not see a clear reason behind such weakness, but it is weak, right? And a strong one is the greenback today, although not maybe enough, but probably the stronger for me today. Sorry.
No, well, the US dollar is going up against euro, against sterling.
Yeah, overall, I believe it's the one with more chances to go higher today. I do believe that we are trading. The dollar is trading positively all across the world, right? So that's a short-term take, of course, but that's what I see. Okay, I do believe that we can wrap up this. Can we?
Yeah. I will ask you for a wrap up. Yeah, for a wrap up, a summary what's happening and what will happen in the next few hours and for the next week.
Well, for the next week,
a lot of things.
Yeah, not too much. But for the next week, keep in mind that we have payrolls on Friday, so that
It
will
will be
be
a quiet,
focus of attention.
week in the
Yeah,
very beginning.
yeah. I'm losing a bit your sound, like you're going away, but I don't hear what you just have said. But anyway, for the next week, we will start
Valeria,
with the
before starting the wrap up, there is a veteran asking about the GPY, the the sterling Japanese yen,
yeah. Well,
the
what I'm
GAPI.
yeah, yeah, I got it. What I'm seeing, and that's pretty much both the pound and the dollar Japanese yen are it's showing the same weakness against the greenback, right? So that's what we are not seeing much action in the cross. But generally speaking, I believe that the pound is even weaker than the Japanese yen. So I do believe that the risk in here has turned or remains towards downside, particularly because today's spike wasn't able to extend beyond previous lows, right? So although I don't have clear levels in here, I do believe that the downside is exposed, and maybe you take a look at this chart. Let's see, around this level, 1883.10 probably will be the level to break to confirm additional declines in here. Okay, but overall, I believe that the pair is bearish.
Okay,
Anyway,
so let's do
overall,
the wrap.
yeah, yeah. Mostly what I have just said, that the GDP revision, final revision of the second quarter reading was even stronger than previously anticipated. We have a 3.9, which is one of the strongest readings of the last couple of years. We have also an upward revision in personal consumption expenditures in the second quarter. Keep in mind that personal consumption expenditures is the kind of inflation and the Fed likes to take decisions, right? It was previously at 1.8 and came out at 1.9. So all in one, those are good news for the greenback. All of these are good news for the rate hike in the US, despite all the uncertainty that Ms. Shalen has gave the market last week. He made a bit of a she shed some light yesterday when her words, sorry, and today the positive figures are supportive of her yesterday's statement. Sorry. Anyway, as I said, I do believe that the dollar is the strongest currency and will probably continue rising mid-long term because mostly of the central bank imbalances with the rest of the major economies. And at this point, I believe the market will wait for 35 minutes until we have Wall Street opening. And once we have US traders on their desk, sentiment will probably define how the day will end, right? If stocks recover and we are positive in sentiment, then the dollar may continue gaining against the Japanese yen and the pound particularly, right? So that's the euro is not clear at this point, but it seems we need to take the 111 level to confirm an additional decline today, and I'm not seeing it much higher than 112 today. Okay.
Okay, thank you, Valeria. So let's finish now. Thank you for coming today.
Yes, thank you everyone for being here with us. Has been
thank you
great.
for has been very, very interesting comments for you. Thank you, Valeria, and thank you, everybody. Thank you for coming to our GDP live coverage. It was a better than expected figure of 3.9 in the last quarter. And what now? Well, Dale Pinker, our top singer presenter, is sick, so he will not be able to run the show today. So our apologies for that. That is pretty much it. Have a good day. Remember, today is Friday. There is a lot of rebalancing and closing position. Yesterday, Yellen talked too much, and today GDP was better than expected. See you next week on Monday with our European live show with Joe Hayelan. And that's it. Thank you, Valeria, for being with us, and thank you, guys.
Thank you. Bye-bye.
Bye-bye. Peace.